if we take breakouts and breakdowns, if we zoom out, and Thursday, Wednesday, Tuesday, we're on Monday. If we look at this, what do we see here? We see structure. We see structure start from here. It goes down, it goes up, it goes down, it goes up, it goes down, it goes up, it goes down, goes up, down, up, down, up, up, down, up, right? So for me, the market has 3 different phases, right? This right here, to me, would be an uptrend. That's a channel, an uptrend, right? This right here would be a downtrend. And then you got another action, it'd be sideways. So you got an uptrend here, you got a downtrend here, you got accumulation or distribution here, depending on where it's at in the cycle, or people call it chop, ranging, consolidation, all 3 of those terms, right? So what happens is, all these price points right here, what I like to do is I like to do this right here. I like to see, or I like to pair the DCG RSI, and it helps me gauge where these waves will be, right? In a perfect world, what happens is, let me get a different color. So if we're in a downtrend, this would be my stop loss. 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 I don't like that color. Let's see if I can see this one better. Yep, that would be my stop loss. This will be my stop. This will be my stop. And look what happens. We broke out right here, right? So now we would be in an uptrend. Look what happens. Price pushes up. This whole time, I see us in a downtrend, right? It's not as pretty as my elements here, but look at it like this. We're in an uptrend until this gets taken out. Now we might trade sideways. Then we might start breaking down. So what I see is we're in an uptrend here. We broke out right here. Now we're range trading. Then we broke down right here. Now we're back in a downtrend. That's all the market's doing. The market's either trending up, trending down, or trading sideways in chop. So when you take a trade, you're either going to win the trade or you're going to lose the trade. When you pair all these things together, you have a better advantage, right? So on this day, you could have made out. Come over to this day. What did we do? We broke the ceiling here. We're going to put a target here, a target here. We're going to have a target right here, and a target there, and a target here, right? How do we get those targets? We measure the move between the floor and ceiling. Come down here. That's how you get those targets, and that's how you get those targets, right? I'm a scalper. I like to be in the trade in and out as quickly as possible because that's just what I like. If I'm up 20 to 30%, it bothers me if I take a loss on that trade. Why? Because I've been doing this for 6 years now, and I've already been in a trade I've already been in multiple trades where I was up a couple $1,000, and then by the end of the day, I was down $1,000. So if you were up $2,000 at one point, but ended the day being down $1,000, that means you lost $3,000. You lost $1,000 from your account. But if you were up $2,000, essentially that could have been yours, right? But you gave it all back. So my motto is I like to day trade for my job, swing trade for profits, swing trade to grow my account, and then I use the profits of both to buy into crypto and shares that pay dividends, right? But how do you do that? You got to be consistent and trade your plan each and every day. And on the floor and ceiling, this is how I measure my move, and I take profits on it, right? Now, this is on a 5-minute chart. Everyone knows I like to trade on the 1-minute chart. I'm crazy. I feel 1 minute gets you in at a real good entries. That's just me, what I'm comfortable with. But if you're comfortable using the 5-minute, it's the same principle, right? It is the same principle. On this day, this is Tuesday, we broke the ceiling. Monday, we broke the ceiling. You could have got a winner there. Tuesday, we broke the ceiling. You could have got a winner there. Coming into the market, we were in a downtrend. So knowing we're in a downtrend from structure, you could have got 2 winning trades here. Why? As soon as the market opened, you could have taken a short trade because up here would have been your stop. You could have taken a short or puts. Price went down in the first 15 minutes, right? Guess what? There's 1 winner. We broke the ceiling. There's 2 winners. Monday was a green day for me and the team. Tuesday, we are trending down. We broke structure here. Right out the gate, you could have taken shorts. This thing fell over $1 something. We're in a downtrend. Guess what? There's one winner. We broke the ceiling. There's two winners. Now we come into the next day. Let me erase all these lines. Clear drawing set. Now on this day, here would have been your stop out, previous structure. The market opened up right here, 432.74. It hit a high of 433.23. That right there is the difference of about 50 cents. You could have been risk-free if you wanted to, but more than likely you're probably taking a loss on that. Could have been a nice, a little winner. You could have taken a break even, or you would have taken a loss, or you would have taken a small profit. Me, if I'm up 50 cents and I'm up, say 10 or 12% or 15%, I'm going risk-free on that. So I would have taken a small winner. Then when we broke the floor here, this was the grand slam. Look what happened. Did we break the ceiling on this day? Nope. We broke the floor. Price comes down. Guess what? You got a nice winner, and price just keeps falling. At this point, this candle put us in a downtrend, and look what happens. Price comes down, comes up, keeps flushing down. So you could have taken a couple trades today, knowing the trend was down. This short little retracement, right? People ask all the time, if we know we're in a downtrend, why are you trying to buy calls? I'm not, because look what happens. You see this move right here? This move is half the move of this initial sell-off and this initial sell-off. So as a trend trader, I'm taking a piece in this move, letting price come up here, reset. And the second we come out from an overvalued area, I'm taking a short right here, and I'm letting price roll down into my favor, and you got another winner there. Does that make sense? Put a DCG in the box if that's making sense. And this is Wednesday. All right. Yep, put a DCG in the box if that's making some more sense to you. Let me clean it up a little bit. That was Wednesday. So guess what? Trading our plan. You're good. Trading our plan. You could have been green Monday, Tuesday, and Wednesday. Now you come into today on Thursday, right? Where was our structure at? This right here. This would have been a losing. This would have been a losing day. If you would have taken it in the pre-market. Guess what? We were trending down. Trending down. We were overvalued here. We're trending down. You would have went short right out the gate. Guess what? If this is your previous resistance, these wicks right here, they're fake wicks. So you would put a stop right here. When this candle right there, you would actually close out of your calls. I'm sorry, you'd close out of your puts, and you could take calls, right? And look what happens right here. Price flushes up. Or you could take a loss there, right? And you could, when it breaks the ceiling, guess what happens? You have a target up here, a target here. Price comes up. You hit a trail stop, and guess what? You could be done. Now, knowing we're in an uptrend, guess what? This brings us to our next thing. This is where I like to take breakouts and breakdowns, right? I could see it a lot better, or I could see it on the 1 minute because I like the 1 minute. Guess what happens? You see right here, this is how I measure the moves, right? Price will come up here. Price will fall down. I'll take a breakout right here. Price then pushes up. And if I put a stop right here, this was my stop loss, and I took my call right here, right? This is what you need to do right here. I mean, you don't have to do it, but this makes sense to me. If your entry to your stop loss is right here, you should come up here and create a target. So you're either going to win this trade or you're going to lose this trade. Look what happens. You enter here, and price consolidates, comes up, hits your target, you go in a trail stop, and you make a little extra, right? That's how you measure a move. Now let's go to a 1 minute so I can show you some good examples. But if you trade on the 5 minute, you saw Monday, Tuesday, Wednesday, you'd be profitable. You got your 2 winning trades, you could be done. Thursday, you would have taken a loss from structure because we should have taken this low out. And if we can't take the low out, what's that mean? This is a reversal. We come down, we try to test it, and then we push up. So a lot of people took puts, and they kept taking puts and averaging down. Well, once the trend was confirmed up for market structure, why would you want to take puts and hold them? I would reverse and take calls, right?